Hello everybody and welcome to the latest edition of the True Potential Do More With Your Money podcast. It's episode 181. We've been going for some time with these podcasts now, one a week, and we're still going strong. We've got an absolute new topic to talk about today. We're going to be talking all around marriage and divorce. Now, we're not counsellors, we're not experts in that area, but where we are, or where I've got the experts with me today, is to talk around the financial aspect of both marriage and divorce, some of the things to think about as you're going through them. So with me today, I've got Neil Rayner, Head of Central Advice. Luke, one of our Head Office advisors. Morning. And Peter, before I introduce your title, you broke the internet, so I hear from our marketing team. You have the highest viewed True Potential video ever.
Oh.
So that's why you're back on today.
Okay,
Peter Coward, one of our non-executive directors. Welcome back, Peter.
Do I get repeat fees for those?
I think we'll see how today's goes. If today's goes well, then you might have to speak to Daniel Harrison and see if you can start getting some of the proceeds that we make on these. But we've got you three in today really just because you're either in the field or you've talked clients through this type of path. And I said to my wife last night, who you all know, Jenny, who's been on this podcast as well before, I said, I'm on the podcast tomorrow and I've been looking up at these stats about, divorce, and nearly half of marriages end up at divorce, and she looked disappointed it was so low. She looked across at me. There's my one Peter Bull joke of the day. So look, let's just kick into it. Really, just top level, what kind of things are you, certainly you two, Jensen, speaking to clients when, they either are getting married or getting divorced? What's some of the real top level thinking, gents?
Well, I think it's just from a client point of view, it's just a realisation that from a financial things are going to be completely different moving forward. You won't have the support of that person anymore. You'll have different tax allowances to consider, and it can affect the products that you're in. People have ISAs if they have general investment accounts, and if they have pensions, certainly there's a lot to consider not only from a taxation point of view, but from a contribution point of view moving forward. And we don't have many conversations. I mean, I can't think the last time that I've had one with a person who's recently split. But certainly, I would imagine if it's 50%, then we'll probably be having a lot more.
Absolutely.
Yeah. I would add to Neil, a big point that a lot of people don't know is with pensions, it's actually separate to your will, and what you need is an expression of wish form, which obviously we push for all of our clients. And a lot of pensions held on platform, and for a lot of people it's a main source of wealth. You see some big size defined contribution pensions, and actually what you need to do there is fill an expression of wish form out, because of the way the pension's held. It's held in trust. It's separate from your estate, and it's separate from your estate in terms of inheritance tax as well. And with the expression of wish form, you can leave a percentage to your wife or husband or partner. You can leave a percentage to your kids. You can split it however you want it. So it really is flexible. So it's always worth filling in that expression of wish form, because a lot of people don't realise that you need to get that done to make sure it's left to the correct beneficiaries.
I think it's a good point. And also, with regards to certain divorce arrangements, there could be things like pension sharing orders where pensions are split down the middle, or there could be things like pension offsetting, when an asset is taken for the value of a pension. So there can be all types of different stuff that you have to think about and deal with as well. But yeah, getting the expression of wishes or reviewing it upon divorce is really, really important.
Yeah, and some of our viewers might be tuning in today but haven't quite seen last week's, where Jamie hosted a really good session all around sort of wills, the importance of them, what they are, why do them, and when to change them. And the one I didn't realise, and I a load of other colleagues I've spoke to didn't realise, but getting married just revokes your will unless there's certain very complex wording in there, Peter, and that's something that catches a lot of people out, doesn't it?
Yeah, so one of the problems is if you don't do a new will in contemplation of marriage, your previous one is invalid. So you have to do a new will either in contemplation of marriage or after you're married in order to have a valid will.
When would you advise somebody to do that? Is it right after? Is it within weeks, months,
I
years?
think the best thing to do is to do it before, just in case something disastrous happens on your wedding night. So.
Yeah. Oh dear. we'll draw a line through that one. And Why once you're married would you say that you need a will? I'll kind of kick that round
Yeah,
the
so
wall
if you die without a will, intestate, without a will on death, that way, it's quite complex in the way that your assets are split. So depending on how much assets you have, the majority can go to your spouse, but also it can be split amongst children. It can get quite messy, and actually for a lot of people, it's not how they would want their assets to actually be left. So it's always best to do a will, even if it is just purely to say you want it all to go to your spouse and then kids, because then that removes any complexities with solicitors, etc. on death.
Yeah.
It means that your wishes are being followed through to the letter,
Yeah,
rather
gives
than
you control.
the rules of interstate. Yeah.
It also speed as well. If you're particularly if you're relatively wealthy, if you intestate, then actually it takes a long time to sort the estate out, or at least where there's a will, the executor can start dealing with administering the estate and making sure your assets go to whoever you want, particularly to your beneficiaries.
Yeah, I think anybody listening, if wills is a real interesting topic for yourself, do dial into 180, because that was even for me, I must say, even with Jamie and Daniel on it, it was very, very interesting, that one. And Neil, we were talking about this before we come on. We obviously allow for products that are owned in a sole name, so that's your product, but also we have some products which can be split between clients.
Yeah, so pensions and ISAs are typically in a single name. If you have a general investment account or a unit trust, these can be joint accounts, and they can share joint tax allowances. But obviously, if that splits, then there may be gains arise, as can be, but you can use certain exemptions, and it depends whether or not you're over the certain limits, which at this moment in time is 6,000 per individual or 12,000 for joint. But yes, there are joint investments that you would have to consider, because you may have those and you're using those double exemptions or taking advantage of those. Depends how much you've got invested, of course, if you're going to go over those exemptions. But it would be something that you would have to consider.
Yeah, and is that something you speak to clients about?
Yeah, all the time. We have a lot of people who have joint general investment accounts, and take advantage of certain gains within those certain joint gains and certain allowances, I should say. But yeah, that would change obviously upon divorce, and it depends, when you're going to transfer the money out. So it is wise, obviously, giving us a call if you have any questions around that.
And all three of you are chomping at the bit to talk about inheritance tax as well, so I can, ring the bell now and let you scrap over that, all proving how much you know the subject.
With inheritance tax, it's been mentioned a lot on the podcast. Just to recap on what the allowances are and why marriage is important. So most people have a nil rate band of 325,000. So a married couple, 325,000 times 2, that's 650. An additional 175,000 each for the main residence, assuming you have children, and that's where the main residence is going. So a normal married couple with kids will have $1 million in terms of their inheritance tax brackets. Why marriage is important is so if you die, your assets go to your spouse and it doesn't trigger an inheritance tax issue. If you die and you're not married, there's an inheritance tax liability potentially straight away, and then another inheritance tax liability on second death as well. So by having that marriage, it removes that first test, that trigger. So it's a real advantage, really, and it means you can plan for inheritance tax a little bit better, meaning that there's not any tax due until second death.
Is that something you've dealt with much, Peter, over the
Yes,
years?
well, obviously, particularly for wealthy clients, it's very important.
Yeah.
Marriage is one of the key planning techniques, so that you can make, if people are married, then you want to make sure that they can leave the estate to their spouse without inheritance tax. And
when you look at the limits, what Luke's just said and Peter's just alluded to, and you've got, one of the recommendations, you've got a £1 million potentially of IHT cover, but as we all know, in today's world, we have a lot of high property prices. We have a lot of people who have accumulated, a lot of wealth in their lifetime as well. So mainly property, which is getting a lot closer to that £1 million limit, and a lot of people will have inheritance tax issues.
If we go back to the point on pensions, a lot of high net worth clients, it's a particular interest, as you mentioned, Peter, before, on inheritance tax, but for me, actually, a pension, it's always been seen as a tool for income in retirement. But actually, with the removal of the lifetime allowance now, and obviously inheritance tax staying where it is, obviously there might be some discussion on lifetime allowance in the future, but assuming that's gone, the pension can be a real tool for inheritance tax planning. You can put more into your pension as you approach retirement. You could take that cash that sits in your estate that would trigger that £1 million trigger, and you could put it into your pension, which is completely outside of your estate.
And that's where it gets a little bit complex as well, because if you talk about if pensions are split on divorce, you've got two main ones really, which are sharing orders and offsetting. Sharing orders will keep it in a pension wrapper, which will be still outside of your estate for inheritance tax. Whereas if you go through the offsetting, which is normally offsetting it for an asset, it's not therefore in the pension now, so that could create an inheritance tax issue.
Yeah, it's kind of links us right back to really the role that you two gents play True Potential, which is advising clients. And I personally or didn't think of a milestone in financial advice is marriage and divorce. You kind of don't think of those things. It's accumulation, it's decumulation, it's retirement, it's those things. And I think that's a great saying. It's a key part of planning is actually getting married isn't just about finding the one you love and settling down. And also interestingly, Neil, when you're talking about house prices, there was a statistic I found last night. The demographics are in an area, the more expensive the home, the higher the divorce rate. Quite an interesting one, with London being the highest overall. And actually there was also a trend, the more northern, the lower the divorce rate was. So I don't know what that says for us gentlemen in the room, but there you are. It was quite interesting. You can dig into the stats and find quite a lot out there. So right, next one we're going to look at is really just some of the different implications of, you've got marriage, you've got cohabit, and you've got civil partnerships. Nowadays, and I mean more sort of coming into this side of the century, people living together, not being married, is far more common than it used to be. It used to be you lived with your parents, you got married, you moved into your new home the day after your wedding, or the day of your wedding in some cases. Today we're in a different world, aren't we? We all find the one we like, maybe not love, and we move in with them because that's the way it works. What's the differences? What should people be thinking about maybe if they're in that position of not married but cohabiting and so on?
I think from a tax point of view, that if you're married or in a civil partnership, there's allowances available to you, which aren't available to people who are just living together. And just one interesting fact, a little quiz question for you. Income tax last came in 1803. When it came in, a wife's income was added to a husband's and taxed on a husband. When do you think that was revoked and changed so that a wife was taxed in her own right?
Ooh, are you on about decades?
Well, nearest decade.
Yeah, I'd say 60s.
70s.
I went 30s.
It was actually 1990.
Ah,
I was close.
Until 1990,
wow.
a wife's income was added to her husband's and taxed on her husband. So
Wow.
until 1990, that was clearly an incorrect position to be, that a wife was not taxable in her own right. So in 1990, the legislation was changed. So husband and wife taxed individually, and therefore allowances were given from both an income tax point of view and a capital gains tax point of view to give benefits to husband and wife.
Interesting. Very interesting.
I think only Luke's excuse, because you probably weren't born then, were you, Luke? Whereas I was just around, and Neil, you were certainly around, so
Yeah.
I said I wasn't going to tell any jokes at your expense today. I just told one slight age one.
So on income tax, one little allowance, marriage allowance, which is not used very much, that if a spouse is not earning, they can give 10% of their personal allowance to their other spouse, which saves up to £252 a year. So it's 1,260 of their personal allowance. Not a great amount, but it is massively underused.
Yeah.
Even revenue stats on it showing that there are non-taxpayers who are not giving up the personal allowance. So not a great amount of money, but it's better in your pocket than in the revenue. So it is, if someone has a spouse who is not earning or not using all their personal allowance, then it is quite a useful little technique and much underused.
Yeah. Look, I'm going to jump back to something you said earlier about beneficiaries and things like that.
Yeah.
Just as we're talking about cohabiting, is there ever advice you give, or when you're talking to clients about setting a non-relative as a beneficiary? Is that something we see?
Yeah,
often?
it is. So look, you may be in a position where you may want to say, for example, your pension. You might have that might be your significant wealth, and with the expression of wish forms, you can give it to charity. You
Yeah.
give it to people who aren't family, and that's how a lot of people want to do things these days. Nieces, nephews, if there is no immediate family available, and it's really useful that. And obviously, it's the same with a will. You can split your assets, and with a personal pension, you can give 1% if you want to someone. And you can, make sure that your pensions and their assets are left exactly how you want them to be left on death.
Yeah, and that's quite important with the new pension rules that come in a couple of years ago, where, pre-75 rules and post-75 rules from a tax point of view, and the whole of the fund being given to clients now can be passed down the lines. So it's really important that you get those beneficiaries registered.
Yeah. And the last one on marriages, who's going to talk about prenuptial agreements? You're all kind of, again...
I'm not married, so I wouldn't have one.
You wouldn't have one.
Well,
Peter, do you?
no. But I think a prenup is just designed to try and protect someone's assets on the consequence of divorce. But it's a legal issue as to how effective they are, and obviously it's a personal decision whether you wish to enter into one or not.
Yeah. It seems very American to me. It seems to have come over from the States, like proms and other
I think it was because there was
silly
a lot
things,
of
hasn't it?
there was a lot of famous people who used to get them. A lot of
Yeah.
film stars and stuff like that. That's how it was glamorized, as if that's the word.
Rap stars and film stars.
Yeah, yeah,
Prenups, not for you, Neil, not for us.
definitely not.
If anyone's got any questions, I assume they can get in touch with us. If they are, watching today and they're thinking, do I need to do anything about, a prenuptial agreement or my will or anything like that? What?
Yeah, any of the tax allowances, questions relating to the product. The point that we've been talking about and Luke really highlighted was, with regards to the beneficiaries of your pension. We have a really easy process now to change that. I've changed mine on my pension the other day, and it was literally, quite just a few clicks.
Yeah.
And the details down to get that registered and give them confirmation back. And it's really important that you do that, because like when Luke was talking about before about dying intestate or being intestate, then it can have different ramifications for you and your policies that you don't realise.
Yeah. So any client going through a divorce that has these questions, obviously we mentioned the benefits of being married, but obviously when you're being divorced, you lose that inheritance tax. That is going to be applicable on death. You're going to lose that marriage allowance if that is in place, and the inter-spouse gift transfer, which is exempt from capital gains. So look, at like any major change in life, if you're one of our central advice clients, if you're going through a divorce or any other change, then it's always worth getting in touch with your advisor to discuss.
And I would say as well, which is a really good point, when a lot of married couples get their financial reviews done, which we normally do every 12 months, we sometimes do a thing called cash flow modelling, and it'll be based on joint expenditure. Well, if you're divorced, that changes. And a lot of the things that we do is people who have got divorced want to do a different cash flow model now, because their liabilities and their circumstances have changed and their income's changed. And what they might want to do is do this cash flow modelling, which basically looks at their income and expenditure and shows how their retirement path would look like. And that will change, obviously, because they're no longer with somebody. They might be with somebody else, but certainly for an immediate point, they might have to think of things individually and how that's going to affect their retirement.
Yeah. On divorce, there was actually from a tax point of view, there was a big change this year about tax on divorce, because normally if you're married, then you can pass assets to your spouse without capital gains tax, capital gains tax free. That only applies if you were living together in the tax year. So prior to 2023, if you separated, and then you wish to pass assets to your spouse as part of a divorce agreement, that potentially had capital gains tax because you were no longer living together, and because you're not in the same tax year. So you actually had to get a court order to avoid capital gains tax, which meant courts were being jammed up with people seeking a court order. From 2023, you now have a period of 3 years after the date of separation where you can pass assets without capital gains tax.
Yeah.
You still can get a court order if you go past the 3 years, so if it takes a long time.
Yeah, it's the year in which you were separated, isn't it? 3 years after that.
So it's actually quite useful. It means that gives people time to sort their assets out, and particularly if they've got a GIA, which actually obviously has inherent gains and potential inherent capital gains tax, then that actually gives people time to sort their assets out
Yeah.
and sort the settlement out. And that was a major change in 2023 and is actually a very helpful change because it should stop people having to go for a court order purely to avoid capital gains tax.
Well, again, I was looking last night, and one of the statistics was, in a given 12-month period, divorces outstripped marriages, as in new, applications. Anyone want to guess the reason why?
No.
Lockdown.
Oh,
Couldn't
yeah.
get married.
Yeah.
Spent 24/7 with your partner,
Yeah.
driving divorce cases through, so you can
All right.
get divorced far easier than you can get married through a lockdown. So there you go. We've talked about updating your will on marriage, and obviously, I'm going to make an assumption here, but the same applies when you divorce.
Yeah.
So it's important to update your will when you divorce. So the way it works is your old will still stands, but what it does, it removes your ex-spouse from the will. Quite grimly, it actually assumes that they're dead. So what it does is it assumes that the assets go to the next person that you put on the will. So it removes your ex-spouse, and when you go for a divorce, as I said, it's a major life change, but actually you might want to change who actually your assets will go to next. So say you had your children down next, you might want to give them more. You might want to remove other people from the will. So it's always really important to update your will and understand that it doesn't actually invalidate your old will. It just removes your ex-spouse and it continues on to the next beneficiaries.
But remember, and although it's fairly logical, you've obviously now no longer got a spouse, so you no longer have a spouse exemption.
Mhm.
So you're automatically into inheritance tax if your assets are more than
Correct.
325 or 500 if you've got a house. So bizarrely, it actually means looking at your IHT position becomes even more important because you
Yeah.
don't have the slight fallback of being able to allow a spouse exemption.
Yeah. Yeah.
Good point. Good point. And Neil, just talking about protecting your assets and investments. Obviously, when if somebody was going through a divorce, what kind of things should they be doing and thinking about when it comes to, say, products that they own, pensions, investments, and general investments?
Luke's point: updating your beneficiaries and your pension.
Yeah.
That's to ensure that it's going to go to somebody in the event of your death, and you may not want it to go to your ex. Realising and having a chat with a financial advisor is really important because we can update you on your changed tax allowances.
Yep.
You might have joint accounts and now you don't. So there's a lot of questions. Can I transfer my ISA over? Transferring an ISA will retain its ISA efficiency, but if you empty that ISA, really importantly, if it's it's been decided on divorce that ISA is going to somebody else and it's emptied, you'll lose your tax efficiency on there. So really important that you speak to us before you make any decisions regarding your financial products.
Yeah, well, I think that's the sort of final note, isn't it, really, is, speak to a financial advisor, because what we've not talked about here, I think we've been quite fact of the matter. We've talked about, the policies and the processes and the rules, but both are very emotional, emotive subjects. So from an advice piece, obviously, when you are speaking to clients who've maybe gone through a divorce but it's not been amicable, or it's not been, they're the one being divorced, if that makes sense. It's obviously something you need somebody like yourselves, not just from a knowledge perspective, but also from that support.
Well, also that clients, if they have gone through a messy divorce or, just a divorce in general, then, they can be quite vulnerable, which is really important. And we have to make sure that all of our clients are looked after, but also recognise that situation can be very, very difficult for that individual.
Mm. And marriage, I think that in reverse, everyone's full of the joys of life, and they're maybe overly emotional the other way, and they forget to do things. I think most of us know, trying to get a new passport, new driving license, all changing your name, etc., is one thing, but making sure you do the basics of getting your affairs in place is important.
I think when we were talking on the podcast last week, we were talking beforehand, and a big misconception is, or a big attitude towards getting a will written was, I'm too young. And some things happen in life that you're not expecting. So really important one that you address it, really important that you speak to a financial advisor and give us a call if you're in that situation.
Absolutely. Gents, I'm going to bring back an old staple on the podcast. We've got a couple of minutes to spare because you've rattled through everything I had to pitch at you today. So what does the weekend look like for yourselves?
Quiet weekend for me, Greg, unfortunately. So very boring. As you know, I've taken up boxing recently, which I'm telling everyone about. So now everyone on YouTube knows. So maybe a little bit of training. I know you're doing running soon. You're doing the Great North
I've
Run.
got the Great North Run. So
I've stolen your weekend fact of what you're.
I've done 3 trial runs, so I'm nowhere near ready. So no, I'll be going to watch my beloved Newcastle United tomorrow. So they're away at Manchester City.
You're gonna run there?
No, I'll run to the train station and get the train. Neil, what you up to?
Again, I'll have a quiet one because, as you know, last weekend we had a very, if the word is messy, then we had a very full-on weekend. So I'm going to get my body back to normal.
Yeah.
And I have a flat tyre on my mountain bike, so I'm going to change that, get out on my bike, do some exercise, and also watch the late kick-off down at the Etihad. So that'll be my weekend.
And Peter?
Well, I'm actually, when talking about families, I'm going to my granddaughter's christening, so,
Lovely.
Oh, nice.
so that'll be very nice.
Well, I think you win there. We've all got boring football and mountain biking, and you've got a lovely weekend ahead of you. So, gents, thank you as ever. You know, I'm very, very sure everybody listening today will have found that very, very interesting, very educational. I know I did. So, thank you very much for that. To all of our listeners and viewers, thank you very much for staying the course. As usual, please do remember to like and subscribe. Thank you very much.